Hi everyone, hope you're all doing well, and today I'm going to talk about a stock where I have sold 25% of my position off. The reason why I sold 25% of my position off is because I have lost a little bit of faith in the management team, and also the financials that they are delivering aren't up to where I expected them to be, and because of that the upside that I'm seeing now is a little bit smaller, and because of it being a bit smaller I don't want to have as much allocation in this company. So now there's a little bit more risk there and less reward. I'm just reducing my allocation to this position. I'll reveal which stock that is, why I'm doing that. Again, I posted a video a bit about it a week ago, but I'll do a bit more of an update as well just today, and some new news that I've seen that has made me a little bit more worried, and I'll show you all that today, so we'll take a look. And just on the side note, the growth stock bloodbath is still going on. Yeah, I mean today it's another ugly one. We look at HIMS here, and yeah, it's another 52 close for the growth stocks, and at least the big tech isn't leading the way as much today. They are having, it seems like Apple, Microsoft, they're having a little bit of a pullback today, but still pretty ugly out there. But going on to the stock today, and that stock is Tattooed Chef. So I have sold 25% of my position in Tattooed Chef, and I sold this out for about a 3% gain, so nothing absolutely amazing, but it's still keeping up the record of not selling a company out at a loss. But we've only ever sold one company at a loss. So yeah, I thought, you know what, I'm just going to sell 25% of my position that I have opened here. And the crazy thing about Tattooed Chef is that recently what actually happened, I made a video last week saying I'm thinking of potentially selling some shares in this one because I'm not impressed by what's going on with the company, is that we actually had a little bit of a pop. They reported earnings, and then boom, out of nowhere, the stock actually went up like 15% in one day. And I was like, what? Like, all the companies that have reported earnings, and some have been good and they've gone down, and then you have a company that has brought out awful earnings and it went up 15%, which was crazy. Bit of a meme stock. So with that little jump there, I didn't waste my opportunity. I thought, okay, we're going to take some of the position off the table here, and that's what we did. And it's crazy to see this stock is one of the stocks that's actually held up in value. You know, a lot of the growth stocks have been falling off a cliff, where really Tattoo Chef has done okay, you know. So bit of a strange one, really. Sums up the stock market. Anything can happen, and one of the stocks that's been less impressive the last few months is one that's holding up its value. Who would have guessed? So one of the main reasons, as you guys probably know, as I did cover it last week, is that I'm not happy with management. Management have made quite a few errors, and when I invest into a company, especially for the long term, I can let a few things go, but it has just got to one too many, and it's been in such a recent kind of 6 months that this has happened. So we had the CFO leaving, which, okay, fair enough, you know, CFOs leave all the time. Then we had the share issue, and then we had earnings, and earnings being delayed 10 minutes before they're supposed to come out. And now the fourth issue with management is they're not hitting expectations, and the numbers they're bringing out, the financials they're bringing out aren't good enough. So management have been poor on 4 occasions now, and that is one thing that did really worry me about the management team here. And now it's leading into the financials. That was finally the point where I kind of moved away from this one a little bit, or just take the risk off. I still think there's potential here with this one, but definitely not the upside that I saw originally. And recent earnings showed EPS miss, it showed revenue miss, margins aren't doing as well, and then it was that bad that even did a outlook cut for Q4. So where, you know, Q2 was bad, Q3 was bad, Q4 is looking like it's going to be bad as well. So this company, since I've been in it 12 months, I've seen the financials not perform to expectations now for coming up to 9 months, which isn't good enough for a company that I'm investing in. And you'll be able to see here the drop off in what was happening here. So originally when I invested into this company, I thought they would at least do 50% revenue growth and potentially up to 60% revenue growth. Now, year over year, what Q4 is actually going to be is 29% revenue growth. So this is nearly half what I was expecting Tattooed Chef to do. So the numbers, the outlook's just getting weaker and weaker. You know, the outlook was changed by nearly like 20 million, and the growth they're going to have is nowhere near what I'm expecting. You know, this year we're on 43%, and I thought we would be starting to push into the 50-60 range, and you know, this is just not going to help things. And next year as well, you know, you're looking at the company going, they're struggling to grow, you know, 30+% right now. Is it a little bit optimistic to think they can do 33%? And that's the bit of a problem here. Now the good thing is the company is still growing in the right direction, and that's why I've not sold all my shares. But the problem is when you go from expecting this company to grow 50-60% and now it's down at 29%, that's a massive drop off. Now the thing is that what you'll have is that, because this is quite an early stage company, is what you hope is that while they're in this hyper growth stage, they grow revenue a huge amount, and that revenue growth is then going to go into profit, and you have quite a good revenue company here, the profit's quite good, but if that revenue growth is already slowing down right now, this isn't going to get to where I thought it was. I thought Tattooed Chef would be a company that could potentially start reaching 1 billion in revenue in the next 5 years. Looking at how much the company is slowing down right now, that's not going to be good, because it's going to struggle to get there as it goes on, because the more years it is developing as a brand and it's already a new brand, if your revenue growth is slowing already, then that's not going to meet expectations. As you expand, what will typically happen in a company is that what we had last year, where we have a company that grows 60+%, is you should see that's still maintained for a long time, where you go 60% revenue growth, 50% revenue growth, 40% revenue growth, 30% revenue growth. We shouldn't really be at this stage already where we're seeing a big massive drop off from 60+% down to the 29%. So that little drop off there means that the upside that I'm seeing on this one is a lot more limited, and as well as that, it won't be able to command the valuation it has because of the slow growth, and that slow growth won't translate into profit. So because it's struggling to reach what the company set out in expectations, it's struggling to reach what I set out in the expectations, it doesn't justify me, because I thought this could potentially be a 5x stock in the next 5 years. I'm looking at that thinking it could still bring in good returns. I still think it could bring in maybe 2-3x in the next few years, but it's not doing what I thought it would. So for me, I've got to take that into account in my portfolio, reduce the amount of capital I have in there, and also because of the risk that financially it's not performing and management aren't performing, I'm taking that risk away right now. So that's what I'm doing, and just managing that position like I said I would do last week. But with the jump that it had in share price, this was the perfect time to do it. And another thing that I saw which was kind of worrying, and this is because the new 10K came out for the earnings, is a little drop off here between their biggest customers. So this is currently Tattooed Chef's filing recently, and you'll see that there's been customer A, which is either Walmart or Target, and then I think customer C is either the other one, and then I think B could be Sam's Club or Costco. What you'll see here is the 3 months compared. You'll see that customer A is going up to 36% down to 19%, so that's a massive drop off. That's nearly half. You'll see that customer C, which is either the other Walmart or Target, I believe, is still holding 30%, and that's actually increased to 33%. But customer B, once again, that's a little bit of a drop off down here. And like I say, that's over the last kind of 3 months. If we look down here, you'll see that when you go over the 9-month period, there isn't that much drop off. So I'm wondering what in the last 3 months has happened, especially to customer A, which like I said is either Target or Walmart. I'm kind of looking at that going, why has there been such a drop off recently on the revenue that comes in from customer A? And that's got me a little bit worried. I think this could be the reason why there has been a drop off on earnings not meeting expectation, outlook's been cut. I think one of their biggest sources of revenue, which is either Walmart or Target, there's something kind of going on there. And that would kind of make sense why over the last few months there's been a drop off on the improvement of revenue. So many stores being added, so many SKUs added, but that's not translating to revenue with Tattooed Chef. So looking at the SEC filings, potentially the reason why is because the stores and the SKUs are all coming in, but at the same time, one of the big customers isn't doing as well on sales. Now we don't know why that is. Obviously, take it with a pinch of salt. This is just kind of me speculating from what I can see. But potentially one of their biggest customers either is reducing the amount of SKUs they have, or if they're not reducing the amount of SKUs they have, they are reducing the amount of stores they're selling Tattooed Chef products. Now, if they are doing that, obviously that would suggest why stores are increasing, SKUs are increasing, but we're still seeing revenue not jumping up as much. So I'm looking at thinking maybe there's something going on here that we don't know about. Now, obviously in the recent earnings, there was nothing of that sort put in there. And let's be fair, management team are not going to come out and say, oh, we've got a sales problem in either Walmart or Target. There potentially could be, or they could be reducing the stores, but management aren't going to come out and say that. But from what I can see, potentially that's happening. Maybe there's some supply problems that they can't get it in there, but I would have felt like if it was supply problems, they would have come and said, just to let you know, we have had problems that the demand's so good at Target, we can't restock the shelves as much, and that's why you're seeing revenue drop off. You would think they would come out with that. If it was a sales problem, you'd think, okay, let's not mention that, which is why I'm kind of seeing what's going on here, I guess. Now, I have contacted the investor relations team at Tattooed Chef to try and get some clarity on 2 issues. The 2 issues that I messaged them about was, has customer A reduced the amount of SKUs or stores? I don't think they'll come back to me and tell me that, but I have emailed them to try and get some clarity on that. The second one that I have emailed them is is the reason why SKUs and stores increasing so much, but the revenue isn't increasing, is because the stores that they've gained recently actually aren't active yet at selling products, and that's why it's not in the financials. I'd be really interested to hear if that is the case, and that would clear a lot of things up. Once again, if that was the case, I am surprised why management haven't come out in their earnings call saying, all these new stores we're getting aren't in the financials yet, they're going to be in next year's financials, just to let you know. And that would have made so much sense. We'd have been like, oh wow, then this is going to be great next year. But once again, that hasn't been. Once again, the communication from management team has been poor, which has been the issue with Tattooed Chef for the last 6 months. So I have emailed them that to see if they will respond to that. That would kind of stop me being a bit nervous with this stock now. But yeah, that's something to keep an eye on from there. I am going to say though, I have emailed the investor relation team before with Tattooed Chef, and when I did, they didn't get back to me. Once again, poor communication. Just to put that into context, I emailed Gang's investor relations yesterday, I think it was. They've already got back to me. So once again, it shows how bad that Tattooed Chef are with the communication side of it. And yeah, this is why exactly I've reduced 25% of my position in Tattooed Chef. Potentially, I could reduce it a little bit more. It's one that I'm thinking of at the moment. But yeah, like I said, for me, the company hasn't performed as good as what I thought it had. So I just wanted to kind of balance that out a little bit and just take 25% of my position off the table here and move it into something else, because let's be honest, right now there's a lot of opportunities out there. So yeah, I hope this video was useful. Just thought I'd update you with that situation, and yeah, I said I would reduce my Tattooed Chef position by 25%, and yeah, I followed through with that last week when we had the crazy jump on it. So yeah, I mean, 3% gain, nothing to shout out about, but still a little bit of money there, and we did all right getting out there with that position anyway. So yeah, hope it was useful, and I'll see you next video.